back to another week in review. We're going to be looking at the trading week of March 16th, 2026. Apologize, no video last week. Sometimes IRL stuff just gets in the way. That was just the case. I didn't have time to make a video. If you follow me on Twitter, then most of my thoughts are there anyway. So, I mean, these really are just a collection of my notes going into the week just to make sure that I'm prepared. And if you guys watch them and you find these useful, like the videos and subscribe to the channel if you haven't. I do try and keep putting these out every single week, but obviously sometimes it's just not possible. I just have a lot going on right now. So trying to get these out as best I can and trying to be committed to every week. So let's get into this trading week. There's a couple of things to note right off the bat here. So it's roll week, which is always kind of messy. So we have the futures contracts rolling from H to M contracts, so March to June, or March expiry to June expiry, I should say. So my charts, at least for reference here, I trade the current contract with the most volume on Monday. So I usually trade the current contract, so H contract, on Monday, and then my charts roll on Tuesday generally when volume at settlement for the new contract is higher, and then I change over and only trade that contract the remainder of the week and then the remainder of the quarter. So I'm going to be using the key areas and references for the market, in my opinion, at least for this video, for the current contract, but these levels are the same and carry over to the new contract as well. So obviously there's going to be a roll gap that needs to get filled, and we'll talk about that a little bit when we look at the levels. But as far as, trading current contract, then new contract Tuesday. So getting data out of the way, we don't have a ton until later in the week. So Monday we have the Empire State Manufacturing Index at 8:30, not really important to be honest. Tuesday we have 8:15 ADP weekly employment, 10 a.m. pending home sales. Wednesday we have PPI at 8:30 a.m. and then Wednesday we have the FOMC rate decision at 2 p.m. and then the press conference at 2:30 p.m. So get ready for that, whatever the market wants to do. At the moment, the market has priced in a 98% chance that the Fed does not cut rates. If you ever want to know where that comes from, the easiest thing to do is just go to FedWatch, and you can see, probabilities for what the market is doing. This is priced on the futures market for swaps. So right here, again, no change. So market's expecting them to hold rates. Thursday, we have jobless claims, 8:30 a.m., 10 a.m. new home sales. And then Friday, we have no major data on the market for Friday. So with that being said, the big picture here right now is that the higher time frames are one time framing down. So the monthly has shifted to one time framing down. Anytime that happens, it can be an early indication of a potential protracted correction in the market. Obviously, from a higher time frame perspective, when the monthly starts to frame lower, you have to kind of take a step back and say, okay, clearly on higher time frames, higher prices are not being accepted. Maybe the market's going to be in a little bit of a correction mode here to find new buyers, or maybe the market has just gotten too long and we need a good solid washout and we need to find new buyers that way. So inventory has been very, very long for a very long time, and maybe it's time we have a little bit of a shift to clear some of that out. Or maybe there's some bigger things happening behind the scenes, that need to be cleared out, or it's just a good reference for a simple view of, okay, monthly has shifted lower. That means that we're probably going to be looking for prices lower. We're probably going to be looking for price discovery lower to find new buyers to bring them into this market. So that's the case right now. So monthly's framing down, weekly's framing down, daily's framing down. The big thing with last week is that we had a huge gap lower, obviously, in Globex, which was completely recovered. We had a trend day higher in the RTH session. We had a very, very clean double distribution profile in the full session for Monday. And you can see basically all of Tuesday, we accepted the upper distribution from Monday. Wednesday, we framed value lower. So we started to finally creep back down into this huge LVN, so into this huge area of, speed and imbalance away from, the primary distribution from Monday. We started to creep lower, and this, to me at least, was the first indication that, the likelihood of us probably revisiting the lows on Monday was quite likely. And if you go, I'm not saying this in jest, being, a hindsight hero here. I did point this out on Twitter as well, saying, the longer we spend basically framing lower, the longer we spend in this lower part of the distribution, the more likely it is we put in new weekly lows. And that was my take, and obviously that is what happened. So I guess I was right about that. But there's things that happen in this market, especially when you have a day that looks like this. You have very clear divides. You have very clear divides of where buyers and sellers are agreeing or disagreeing on price. So we have the POC into the high on Monday. We have this upper distribution into the high on Monday. We're able to close Monday up here. The moment we start framing below it, we start to see, even if you take out the order flow, everything out of the equation here, we start to see periods not being able to close in an RTH session above the highest volume traded price on Monday. So we start to have a lack of acceptance right here on what the market did on Monday. And we frame value squarely lower than we did the previous day. We started to take back this LVN. We started to backfill this LVN. So when you see this happen, and when you start to see this happen around a key reference point, which we had the prior 3-month balance range that we stayed in from, I guess it's maybe even 4, but the prior lows of that multi-month balance range, when we stop being able to hold this and we start framing value lower again, generally what you can expect here is price is going to go back and traverse Monday's value and explore the lower end of this distribution when we start closing below and we have no ability to basically to stay above this LVN. So that's what we got. So a couple things. The big thing for me, again, this reference point right here, this 67.50 to 37. So basically this this RTH gap, as well as being below prior 3 months balance lows, like this area is going to be pretty key to me. So the big thing I would say, at least in the short term, the way I'm looking at this is that sellers will continue to control the short term narrative here, or the short term auction below this level. So this week on the old contract and the new contract we roll over to, if we can't bid above 67.50s, if we can't get above this giant LVN here, really if we can't get above 67.70s and get back into that old balance range, then sellers are going to continue to control and pops are going to get faded. So I'm going to be looking for those early pops potentially, those early or late pops potentially into this range. If we can't build value above this, if we can't hold this, if we can't see solid volume start to build and hold to drive us away, then again, we're going to be seeking new buyers lower. So the immediate reference point for me, again, on the old contract is obviously going to be the close, basically. So Friday's settlement of H contract right here down at 66.36s. This is basically the RTH weekly low last week as well. It's also the 200-day simple moving average on the daily time frame. So this is a huge spot. This is a huge area of reference. I think this can give you a really early view and early reference for what this market wants to do. This day left a bearish imbalance. So what that would mean is that, we should, in theory, fill out this profile lower to have a balanced profile. So really that would look for the ETH lows at 65.80s. So the early thing for me really is that if we're below 66.30s, if we can't bid back above the 200-day moving average, if we're outside below last week's value area low, if we're below the contract settlement at 66.36s, then I'll be looking for that short trade to get us down into that ETH weekly low to fix this bearish imbalance down into 65.80s. And potentially as low as the November lows and 65.40s down here, which is the prior balance range lows on higher time frames, or the monthly time frame, I should say. So there's two things. First of all, I would like us to explore this. I would really like us to see, I would like us to explore back down to this ETH weekly low. I'd like us to basically complete this imbalance, fill this in. If we're starting to put in solid volume and sweeps down into 65.80s or potentially down into 65.40s, what we could see is a very nice low start to form somewhere in this range for either two things: counter rotations back up to get us back up into the meat of last week's distribution, so in the meat of last week's value, which is the 6,700 area, which is where the POC is, potentially back test 67, 30 to 50 area. Or if we put in a good solid low here, that could just be a counter rotation back up into this range. Or if we can put in a solid low here and we can start to accept back up above this area, above 67.30 to 67.50, then we might potentially have a swing low in the market. What I would really want to see for a swing low, and what I like, generally speaking, what I'm looking for a swing low is a solid blowout of solid blowout of volatility. I want to see a big liquidation. I want to see a big reversal. I want to see a lot of excess on the day, so I want to see a lot of excess into the lows, and I'd like to see a lot of volume traded on that session. Whether or not we get that in roll week, whether or not we get that this week, I don't know. But generally speaking, what we want to see for a good low is something like what we had in November, where we have a huge amount of volume traded on the session. We have solid excess on this low. I mean, ideally, what we really want to see is something like we had in April. Like, we want to see something like this. Huge amount of excess, huge amount of volume traded on the session. Obviously, this is a massive outlier of a day, but the big things I really want to see generally for a solid swing low are going to be something like, usually 3 million total volume or over is a good indication, and I'd like to see, a decent amount of excess get put in on that day. I don't really want to see something like this, where we're closing into the low on a high volume down day. Like we have no excess into this low. This is the ETH session, but it serves the purpose. We have no excess into this low. We did actually close the ETH session below 6630s. If you back adjust your contracts, which I don't, that's actually a second close below, down into below the 200-day moving average. So we don't have any indications, at least for me at the moment, that I'm looking for, a solid reversal back up into the highs. I really need to see those things form during the day and, hold into settlement for me to be like, okay, maybe we have a decent chance of this reversing here. If we look at the cash index, we're about 30 points away from the 200-day moving average. I'd be surprised at this point if this doesn't test it. I mean, this is going to catch up as well, but again, this would kind of correspond with filling in this imbalance lower into 6580s, potentially testing 6540s. Being this close to the 200-day, especially with a chart that looks this shitty, I'd be really surprised if we don't actually test this in here. And I think potentially test, again, the bottom in November's lows into 6520s on cash, which is 6540s down in here on ES. So this is generally where I'm looking. Like, we failed the top of this range, we're failing the midpoint of this range. Going to the bottom of this range is a pretty natural movement. So again, if we start to see a decent low start to form down here, I'm absolutely open to trying to take that long trade for either those big, a big counter rotation back up, or potentially a swing low, depending on how the day looks. So I think we're closer than not to something like that happening, unless we see like a real huge volatility blowout with some big headlines that come in. I think we're close. I don't think we're there, but I think we're close. If we start losing 6540s, there's really nothing until 6450s. Like, we could easily fall another 100 points. Like, if we start losing 40s, like, there's no way I'm going to try and catch a knife. I'll either stay short and look for a bigger liquidation, or I'll just set out of the market. That's how I'm going to look at it. So NASDAQ is basically the same, and again, somehow NASDAQ is still holding up better. I mean, we've gone absolutely nowhere, right? Like, we've gone nowhere for months on the NASDAQ, so it's going to be the same idea really for me here. Again, bearish imbalance lower, which completes around last week's ETH low in the bottom of last week's distribution. This would complete around here. This is also the current monthly balance low. We haven't actually tested this in RTH, so we did it in ETH. This is a really nice long trade, a really good spot to look for a long. We haven't done that in regular trading. So again, early reference will be Friday's settlement, 24,370s. Basically, we also have the 200-day simple moving average right here. If we're below this, then again, it's going to be a sell from me, looking for the bottom of last week's distribution to get tested. And again, I'm open to potentially seeing, looking for a long trade down into this area again at 24,050s. If we're below this, I got nothing until 23,500s basically. So there's really nothing in this range again down here. If we start to melt through this, I'll probably either stay short looking for this move and traverse down into 23,500s, or I'll just sit out of the market, one or the other. Same thing with the NASDAQ. I mean, like, buyers need to do the exact same thing with the NASDAQ to get a footing on this. It's stayed in balance. It's stayed in, this distribution has been fairly locked in. I don't know if it's going to lead the way back up, or if it's just late to puke. I really don't know. I don't really know how I feel about the NASDAQ, considering we've gone absolutely fucking nowhere on this market for months and months and months. What I do know is that if we start breaking below, this larger distribution, it's just one of those things where like you just go with momentum. You don't try and pick a low until we see a solid footing form. If we start to put in the imbalance stage on something like the NASDAQ with how much inventory is sitting up here, it can get very nasty very quickly, and I'm not going to be trying to catch a knife. So you can keep it simple like that. So hopefully that helps. Again, this could be a complicated week with roll, with split of volume on contracts, especially with FOMC. It could be messy. It's going to be messy for sure. Our chart's going to be all over the place. But as far as, things to look for, that's what I'm looking for this week. These levels apply to both contracts again. So there's about a 50-point gap between the new contract and the old contract, which means that we settled around, I think, 66.80s. I think we settled around here. I'd have to look, but I think we settled around basically just below last week's POC on the new contract. So like all of these levels are the same. They're the same for both. I'm just going to be trading the old contract because it has more volume on Monday, and then we'll roll over on Tuesday. So if this video helps at all, like the video. If you subscribe to the channel if you haven't already, appreciate your time. Thank you very much.